A very warm greetings to each one of you and thank you for watching this video. We have started reporting valuations of various asset classes that are tradable in India, and this is our second report in that regard. In quick summary, on the equity asset classes side, large caps have turned slightly expensive owing to the recent run-ups, but when we compare earnings yield to that of government security yields, the valuations continue to be attractive. The mid caps and small caps were trading at attractive valuations even in March and April days, and they continue to be attractive even after the recent run up. Nothing much has happened in the debt asset classes in the last month or so, but then in the month of April it did break the 6% barrier and thereby giving a good amount of return to the investors. On the USD INR side, USD depreciated against INR owing to FII and FDI inflows, especially due to Geo. And finally, on the gold, gold in US dollar terms made a recent high and in INR terms made an all-time high. Let's look at each asset class individually and understand their valuations. First, on large caps, we have a data of over 23 years, and as you can see, after a deep plunge in valuations between April 2020 and now, there is a small uptick which points out that the valuations are on the up right now and it is trading close to the averages that we have seen earlier. But when you look at earnings yield versus government security yield, it is attractive. Next is mid caps. We don't have a huge amount of data here. We have about 5+ years of data. Mid caps are actually trading at almost all-time lows, though there is a small uptick even in the valuation of mid caps. They continue to be extremely attractive. From a figure of about 45 that we saw between December 2017 and April 2018, we are right now seeing a figure of around 25. Next is small cap. Small cap, again, we have 5 years of data. Small caps have even become cheaper than what we saw in April 2016. Now on the debt side, the 10-year government security yield continues to trend downwards, though there has been a bit of a pause in the recent days. This is in spite of the fact that government has announced a huge amount of borrowing, but RBI has played really well to keep the rates well under control, and we continue to believe that RBI's interest is to align the long-term interest with the short-term interest, and that's the reason why you are seeing a lot of newer and innovative operations like Operation Twists and many other operations to bring down the overall interest rates for the borrowers. Next is USD INR exchange rate. While there has been a bit of a depreciation of US dollar against INR in the last month or so, the trend looks up, and we believe that till the time that we don't see a figure of about 74 and lower, the trend can continue to be up only for USD against INR. And finally, on the USD gold, we have over 28 years of data, and as you can see, the USD gold is trading well above the averages, and it is trading very close to the all-time high that it saw in the month of September 2011, which was $1,911. We assume that this time around that figure should be broken and dollar should at least trade and move above $1,911 towards $2,200 or so. So thank you for watching this video, and if you have any questions, please do write to us and we will be more than happy to revert back to you. Thank you again.